Welcome to the Aviation Insurance Podcast, the podcast that helps aircraft owners and aviation businesses learn and understand the complex world of aviation insurance and risk management. From the basic principles of aviation insurance to risk management techniques and updates on the aviation insurance market, the Aviation Insurance Podcast is your guide to traverse the world of aviation insurance. Now, here's your host, Tim Bonnell.
Well, welcome to the Aviation Insurance Podcast, where we talk about the fundamentals of aviation insurance. And part of insurance is safety, mitigating loss. And risk management is a big part of that process. And buying insurance is just a form of risk management. It's a risk mitigation tool. And so today, I just wanted to talk a little bit about the risk management process from a very high level. And risk management is an ongoing cycle, and it really starts with identifying hazards, right? So we think about, high-powered aircraft, millions of dollars, taking off and landing on short runways and with passengers. And so we have to look at the various hazards involved in those type of operations and say, what do we need to do in order to make sure that we are as safe as possible. So safety really is an effort to have as few or as minimal potential loss as possible. Safety doesn't mean there's an absence of risk, because there really never is. There's always some level of risks. We just want to minimize it to the minimal amount, that acceptable level of what we can live with. And so when we think about the risk management cycle, from a high level, there's really four primary steps. There's, the hazard identification, right? So we identify, then we classify or evaluate that risk. And from there, we apply a risk management mitigation or risk control tool. And then we evaluate or reclassify that risk and go back to the beginning. What do we do with that hazard? And then back through that same circle of items. So the hazard identification, again, what is the potential? The one I talk about regularly is ice on a runway. What is the potential hazard? It's ice on a runway. So what are we going to do? What are the probability? What is the likelihood of something going wrong? So from there, we've got to categorize what that the odds are something's going to be wrong. And from that categorization, decide on the appropriate risk control method. So a really easy way to do that is simply to weigh the potential severity and potential frequency of a loss. And if you draw, a box with four lines in it, so you basically have four squares, with the top square being high frequency and high severity, the second box being high severity, low frequency. Down here, the bottom left, you have, and it's the opposite way for you here, I see, but low severity, high frequency, and then low frequency, low severity. So we're taking those frequency and severities, we're categorizing them. And so if something's a high frequency of loss and it would be high severity, that's something we don't want to do. So as we move into our, we've identified it, we've classified it as high frequency, high severity. Our risk control or risk mitigation technique is going to be to avoid that kind of risk, right? If driving our car into a flaming building would be a high severity type of loss, and every time we do that, it's going to be frequent, we don't want to do that. However, if we're flying an aircraft, very well maintained, very well trained crew, really we have a low frequency. It's a low opportunity for a loss. However, when there is one, there is a high severity possibility. And that's really where we want to transfer the risk. And a lot of times that's done via an insurance policy. We will buy an insurance policy to transfer all or a large portion of our risk to someone else. The other way that could happen is via contractual agreement. We will get somebody else who has an interest in it to carry it. For instance, if we are leasing that aircraft to someone else, we are going to ask them via the contract, we're going to make them responsible for insuring that particular risk. There's other ways to do it, but high frequency, high severity, we avoid. High severity, low frequency, we transfer. Now we get into high frequency but low severity. Maybe this is, the person who does, sawing wood at the sawmill. They might regularly get splinters in their fingers. So it's a high frequency of something that happens, but the severity of that splinter in their fingers is pretty low. So what they want to do is apply, loss control, loss engineering. We're going to retain that risk, but let's put some steps in place, wearing gloves, using safety materials, making sure that, the wood is not full of splinters and so on and so forth. That's why you'll often see, safety lines on the floors of MROs, FBOs. That's why you'll see, safety glasses, hard hats required in certain areas. That's why wing walkers are used. These are risk control techniques that are used for high frequency, low severity type of losses. Then if something's very low frequency and very low, severity, we just ignore it. We don't really worry about that unless it moves up in category. So we've got high frequency, high severity. We want to avoid those. That next category, low frequency, high severity. We talked about aircraft operation. So that's where we want to transfer typically, right, to an insurance carrier of some sorts or via a contract. We got low severity, high frequency. We want to retain that risk, but we want to put in loss control measures or engineering to try to reduce those potential losses. And then low frequency, low severity, we are not going to worry about that. It's just not a deal. So again, that matrix could go into, much more detail, but that's a simplified risk categorization matrix. And then in that matrix, it allows you to apply those risk control techniques: avoid, retain, transfer, or ignore. And so that's kind of a simple risk assessment, which then, we go into that final part of that risk management process and just evaluating its effectiveness. Well, are we seeing a decrease in losses? Are we mitigating our losses? If so, what else do we need to do? Are we seeing new hazards emerge that we need to put through this process? So we talked on a previous episode about safety management system, and safety risk management is one of the key pillars of a safety management system. But having a general knowledge of a risk management process will help you make better decisions. You can apply these techniques, as many do, into whether to take a trip or not. A lot of people will have a risk management tool that they use prior to flying, where we look at the pilot, the environment, the aircraft, the weather, all those things to make a decision on whether to take a flight or to sit and wait for things to change. So risk management is an important way to increase safety, reduce risk, and all of those things go to improving the insurance premiums, your insurance program. And so risk management, very important part of the insurance process and safety. Join us again next time as we continue navigating the waypoints in aviation insurance. Until then, enjoy clear skies and unlimited visibility.
Thanks for listening to the Aviation Insurance Podcast. If you found this episode of value, please share it with someone who would benefit from this information. Don't forget to subscribe in your podcast player so you don't miss any new episodes, and to help our show have more impact. This episode is brought to you by Aeris Insurance Solutions, your flight plan for navigating the turbulence of aviation insurance. For more information, visit aerisinsurance.com. That is www.aerisinsurance.com. Disclaimer: these episodes are for educational purposes only, and due to the changing regulatory and legal nature of the business, some information may change over time. Having a well-educated and experienced aviation insurance broker on your team is an absolute requirement to success in business and for managing your aircraft and aviation business risks.